You described that wages are going up, the benefits are causing people to ask for more money to come back to work maybe, and maybe they're hesitant because they're still fearful of COVID. So that seems transitory. Some of these other issues, supply issues, the difficult comps from last year in terms of prices being depressed, so we see the inflation there. That could be transitory. In your view, are we already seeing monetary effects that from the Fed and from fiscal spending, or is the inflation now just something because of these one-offs that are going to ease? Do you think we've already done too much in terms of spending, and we're starting to see Milton Friedman type monetary inflation?
Well, I think the Democrats, Trump ran a 3.8% unemployment rate with $1 trillion deficit, and shockingly, interest rates fell. And so the Democrats picked that up and said, we can spend all the money we want, there'll be no consequence. And I think that's not true. When they ran on this stimulus package, so they passed it in March. You knew the pandemic at that point was going to pass in the summer, that we have herd immunity, that we were on a steep slope of vaccinations, and yet they still did what they call the CARES Act. They have great names for these acts. This should be the Throw Money Away Act, because we really had to help people who didn't have a job and not those who should have been coming back to work. So I think, yes, I think we've probably created a floodgate here. There's so much money printing, and they have more coming at us, under great jargon names that, you have put so much pressure on interest rates, and it could really slow the economy. And there's some fundamental problems, right? I mean, these supply issues are probably long dated. The housing market is in a unsustainable, euphoric increase in prices. I think I do think there's some long-term issues. We do have short-term issues. I talked about in travel. You have the bubble from the summer. You're going to have this spending wave. And I do think after Labor Day, people get back to work. And we want inflation of wages. We want people to make more money. But in our case, in our hotels, we're offering $16 an hour in full benefits, and they won't come off their couch, which I think is, it's not bad staying home. I mean, you be with your kids, and 30% of some of our apartments in South Florida are not paying rent.
Barry, do you think the Fed's hand is going to be forced to
Yes.
go higher sooner?
Yes. They dug a deep trench for themselves, but I think they will have to reverse course.
How soon?
You'll see pretty soon, within 2 months. And
to raise
might
rates
stop
or taper or something.
Taper, slow purchasing. And I think if they don't, I think this little crazy wave of inflation could get out of hand. And I mean, Americans have this cash, they're not going to take it back from them. And there's probably more aid coming. They just passed or introduced a bill to help the hotel workers. It's like a year and a half too late. So it'll die in Congress. But, I think the political class has to pay attention to the business community and the economy and not do jargon about, helping the world. And let's have everyone should be happy act. Who would be against that? And that's not what we need. Precise, laser-like, legislation to help the industries in need and promote the business investments we want. So, I think this is it is a bottleneck. I mean, we will get chicken wings back. Eventually, people will start plucking chickens again, and Chipotle will be able to serve their meals. And I'll probably be able to get the curtain wall I need for my hotel that we're building in Nashville at someday. But they fundamentally have changed the economy because of the amount of stimulus, not just here. Don't forget, the U.S. economy is kind of roaring underneath all this. There's been enormous wealth creation across the board for everyone, including those we want to help and the underserved. But Europe is closed. I mean, when Europe opens, hold on to your chair. I mean, I actually was on the coast of Europe recently, and it is closed tight. It is like New York City last March and April. I mean, it is closed. So when 330 million Europeans start doing things again, I mean, it's going to be tough. I mean, it's going to put more pressure on all these prices. It's now cheaper to build with steel than with lumber. That is a first because lumber prices have risen so far so fast. So it is. We've created a really odd-looking set of circumstances here, and the political class isn't helping anything.
Shepard Smith here. Thanks for watching CNBC on YouTube.